Looking at the bond market, specifically the 2-year yield, surprised we're not seeing a bigger reaction, maybe yields moving to the upside. As Hammock, a voting member, says she doesn't even see the need to cut.
Yeah, I think at this stage, the market has priced in, probably the fact that in January we're not going to see another cut, so the Fed is on hold, and so I think it's really going to be data dependent in terms of whether we'll see further downside on the labor market front, and so I think that's going to be one of the key inputs into Fed decision making.
All right, turning back to the markets right now, we're just talking about a bit of a rebound in tech. We're going to be talking more about that, the technical take coming up in just a minute. But when you're looking at the tech trade right now, going into the end of the year, we've seen recent strength. But could that change with the idea of profit taking and maybe some people trying to lock in some of the big gains that we've seen in a number of these AI-focused names?
Yeah, I think we had a great day on Friday, but I think it's too much to extrapolate that too much into the future. We think going into 2026, there's continued to be scrutiny on the CapEx side and whether companies can monetize the spending that they have. So it's too much to say, and I think it's as tax season comes in, I think companies or investors might take some profits going into the year.
All right. So you say you have some valuation concerns on the hardware side. It was actually a note out over the weekend from Bernstein saying that NVIDIA is actually the cheapest it's been in quite some time. So you're not. Is that the hardware you're talking about, chips, or is there some other hardware that you're looking at? Is it data centers? Is it some other part of this AI trade?
Yeah, we think hardware. I think it's the entire complex, whether it's chips, whether it's the data centers. So if we think about where the biggest value is, in our opinion, it's more companies that ultimately have the ability to monetize through either enterprise use cases or consumer use cases. So, if you look at the last 3 years in terms of what's done well with the AI trade, it's been the hardware names, the chips, the NVIDIAs of the world. So, yes, it's true that some of the excitement and some of the sentiment has come off since October. But we would say that there's potentially still more downside if we do see some of the CapEx plans being revisited potentially in 2026.
All right. So right now, your key conviction positions are small caps, healthcare, and consumer products. Interesting enough, over the weekend, the Wall Street Journal actually put out an article talking about if these consumer product names are staples, I should say, are still defensive. Is this a defensive trade in your mind? Are you worried about some type of volatility going into the new year, or do you actually see upside for consumer products and staples?
If you look at what's done well, it's really been high growth names. It's been risk assets also outside of the U.S. And so if you look at kind of, just where valuations are with some of these consumer names, as well as the potential for upside. And I think they've been impacted by kind of the negative theme around the K-shaped economy. And we think that some of these consumer businesses have strong franchises. And if there would be a pullback in the market, I think those stocks would do well as well on the downside.